Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, August 10th, 2016. This is part 2 to the long trade ideas video. I did a part 1 yesterday covering a handful of names that look to be setting up as possible long trade swing trades, even some longer term investments. And this video will be a little bit shorter. I have about an equal number of names to cover, but I spent some time discussing my thoughts on oil and some other things in that video. So this one will just dive right into the trade ideas, starting out here with RTK. This one I mentioned about 4 days ago in the trading room. I made mention that it was pushing up against a downtrend line, a key downtrend line, and earlier today I posted that it broke out. Now I was ready to fire off and put this as an official trade idea, and I still might. The only problem is that it popped and ran so fast this morning. It did come back in just before I started this video. I was trying to get everything ready for the video, or I might have been able to add that on. What I'm getting at here, I want to find an objective entry. So my first target was right here, this 293 level, and we've already hit that today. So the stock broke out. You can see, if you look in the morning, it started out here with an objective entry, but ripped up pretty quickly. By the time I looked at my price alert, it had moved up quite a bit. It's fallen back a little bit. And again, the problem here is we're pinched now between the breakouts. So this stock is definitely broken out. Looks like volume confirming. You can make out that volume bar there. And keep in mind, we're only not even 1 hour into the trading day. So it's very strong volume. Definitely a confirmed breakout. Now the next objective entry we'll have to take out not only that 293 resistance level, but I'd like to see us now take out the highs. So if you've taken a little of this, if you received that or looked at the chart I put up in the trading room, or made mention after I mentioned this a few days ago, maybe put on your watch list, set your own alert. This one now has a high of $3 today. So the next move over that should do the trick. And this is a low price stock. It's been beat down. This is an ag stock. I like a lot of the ag names. I'll go over a couple of those today. And I think this one, without a doubt, if there's any follow through to this breakout, and so far so good. I don't know if that's earnings induced or not. I haven't checked, but it's definitely a technical breakout. You may want to scrub it for earnings. I took a small position. And I'd like to add to that, and I think this one can easily head on up here to any of these levels that I have. I set my price targets on those upper targets, T2 and T3, a little bit below the actual resistance levels. So my preferred target, let me just say this, is this 385 level. So I'll sell a little bit before that 373, assuming the breakout sticks. Stops, you can either put a stop below this horizontal line at 227. That's very good support. And you can also draw an uptrend line here. You can zoom in on a 60-minute chart and see it a little bit better. So you have this sort of triangle pattern right there pinching, and that's where a tight stop could be placed below this downtrend line. You might want to give it at least a 60-minute, possibly a daily close below that if the breakout fails. Give it a little room to come back in or maybe back test, but I think that one looks good. Again, low price, $2.88 a share. Low priced equals aggressive. It's just that simple. Lower priced stocks tend to carry more risk, and they also tend to be more volatile. If that level is cleared, ultimately, longer term, if the sector really firms up, there's a level here around 528. I may extend targets. So again, look for an objective entry. Objective being either a pullback to back test the downtrend line, or a breakout above that 293, preferably the $3 high that it's put in so far today. All right, let's move on. FRO. Frontline shipping. This is a shipping stock. Nice. You can see nice support so far that it's held here around the 725 level, and that would be your most objective entry to have it pull back there. There's some minor support here around 835-ish. We need to clear. These are some levels there. So this one's not actual, or at least not timely right now, because I don't have a downtrend line or a very solid horizontal resistance to trigger alongside entry. Although again, you can see the lines right there is 832, and as you go back to the left, you see reactions here. You see a gap right here. Really reactions along the way. So I should put a line there, and that would be a possible entry, but I would say a fractional entry, meaning not a full position at that point. And also keep in mind the shippers are pretty volatile, even though this one's about $8 a share. So there's your downside. You can buy and dips back down to this support level if we get there with a stop not too far below. You could take a starter position on a break above 835, let's say, to be safe. That would be your first resistance, but at this point that would probably be minor, so I would hold out for a tag. This downtrend line may or may not come into play. There's quite a few reactions back here, so there's a downtrend line I drew off these highs back in November of 2015. And that would be a target right there. First ideal swing target around $10. And then if it gets through there, which I think it might in the long run, if the sector holds up, $11 would be your next target. RIG. Like I mentioned in yesterday's video, a lot of the energy stocks that I'm covering in the last day or two here will be dependent on what oil does. I've given you my thoughts in yesterday's video, so I won't expand on that today. But here's RIG, and if we go back, we have to actually go back to a longer period here. This is now I'm on a 2-day period, 4-year chart, and you can see this nice downtrend. Breakout and a back test. That's a nice looking pattern. I know the oil stocks have been getting beat up as of late, but they're still well off its lows. And if you're looking for an objective stop level, you can just draw an uptrend line off the lows. See how well we've held that uptrend line. You had a divergent low there as well. Here, let's go back to the daily chart. Not drawn out here, but when that low was put in, it was very powerful bullish divergence at that low. And there's that uptrend line. So this one, the most objective entry at this point would be another back test of the downtrend line as well as a test of this uptrend line here. And those intersect at this point. Now it would have to fall straight down to hit them while they're intersecting. So more than likely we're going to hit this uptrend line first. So that would be your first objective entry. There's also a pretty fat gap right here. If you zoom in, you can see that gap. So you can even go long at the top of the gap. You could go long at the bottom, maybe add to it on the way down, give yourself a little room to add. And finally, I wouldn't add on a break below here. The problem with adding on back tests, I would add on that uptrend line, but not on the pullback to the downtrend line, because the problem with adding on back tests is you can continue to back test lower and lower and lower. However, if you do, you can see there's some reaction lows right here, these two. That should be your final stop. And again, I'm looking longer term. If you're saying, well, Randy, that stock is 1087 right now. So roughly from where we are to go down there, that's a 7.5% drop. Well, that's peanuts if you're looking for a swing trade, which I think this one has a potential to run all the way up here, at least the 1480 area. That's a 36% gain. Ultimately, when all is said and done, that would be a longer term target up around 2182 or so, 2120, and that's 100% return on your money. So remember, stops are they need to be commensurate with your profit target. And just using a risk reward ratio of 3 to 1 or better is my preference. So, if you're shooting for an investment or a long-term trend or swing trade with 100% return, you can allow yourself a 20% loss, possibly a 30% loss, no problem. All right. If you're comfortable with it, and to do so, just adjust your position size accordingly. You can take a half position, and you're still making what would have been a 50% return, or you're cutting down a 20 or 30% loss to what would effectively be a 10 or 15% loss if you take a half position size. All right. Next one up, RRGB. This one was on my watch list, and remember yesterday I planned to do part 2. I was called out early. I had to do some stuff in the afternoon, close down trading early for the day, and this little bugger broke out. I had planned, it was on my watch list while I was still in this pattern. That was a big candlestick, big bullish engulfing candlestick. Look at that thing, it mauled. Goodness gracious, that candlestick engulfed. Oh, going back all the way to June, couple months of trading, or at least over a month and a half of trading. All those candlesticks were engulfed by this big bullish engulfing candlestick. Very high volume breakout. Everything's confirmed. At this point, we're a little bit in no man's land. The most objective entry, I don't know where this thing opened at yesterday, but it would have been somewhere closer to the breakout point. At this point, you either wait for a back test. You can go long here. It still looks good, and maybe just you have to protect your stops a little bit. You might not allow for a back test, because if you did, that takes you down. We're at 52.50 right now. Back test, That's not horrible, 5.4% loss, but again, you have to quantify what target you're going for. I don't have them all marked here, but there's a gap that I'm looking to be backfilled. If RRGB, Red Robin, can push up, enter the gap from below, then it will likely backfill that gap. So your target should be set, your sell limit, just below the top of that gap there. So like I said, bullish divergence was in place, confirming that wedge. And that was such a big pop. My guess it's probably earnings induced, but I haven't looked at that. ENLC. This is EnLink. This is the LLC. Now, we had a really nice trade earlier in the year on ENLK, and I'll show you that chart in a second. What I'm looking at here, first of all, it's a very nice yielding stock. This one, on these shares, you have a dividend yield of about 6.2%. And this was a growth and income trade on the site. And it seems to be pushing up against this resistance level around 1690. We had a reaction back here. You can see the volume at price histogram bars are, showing that is a pretty key level. And so that would be a breakout above 1690, ideally on volume, above average volume. And that one, over time can probably run all the way up here to the 2350 area. And again, you're collecting a nice dividend while you wait. And you could quantify your stops or place an objective stop under this range right here. If you take a shaded box, let's do that. You can see how the stock has been trading in this sideways trading range. So ideally, if it pulled back down, maybe a long entry at the bottom of the trading range with a stop not too far below, or you could take it here, if you're expecting a decent move in the long run, or maybe it trades sideways for a while and you collect that dividend if you're more of an income investor. So just an idea to share. And let's take a look at the other share class, ENLK. This is the one that we traded earlier in the year. And we might have had a couple trades on this one. And right now, I don't have that exact level. The consolidation doesn't look exactly the same. I believe these are just a different share class structure. I didn't trade the ENL. This is the one I've traded, ENLK, before, not the ENLC. So you can trade either one. You might want to look into them. This one has a higher dividend yield, about 9%. I think that's why I put this on as a growth and income trade before. So, like I said, I can't make the same case. This one has resistance at 1897. Well, actually, that was the target back then. Level is 1903. So this one really needs a break above $19 to run. And if it does that, looks good all the way up here to about 25 and change over time. A little bit, I should point out, a little bit of divergence here. Gives me a little pause on this one. Right there, you can see the negative divergence at the most recent high. Okay, next one up, DB. All right, we all know that Deutsche Bank is pretty much toxic, but how much of that's priced in? And another thought, and not to get off track here with the fundamental, is they're not going to let Deutsche Bank fail, more than likely. Look at Citibank, Bank of America, JP Morgan. They were all trash a few years ago. Not only did they bail out the bondholders, they bailed out the shareholders as well. The government did. So I think it's more of a confidence thing. Take that for what it's worth. I'm not going to really, that's not my forte, but that's my take, is that they're not going to let Deutsche Bank go to the ground, go to zero. Anything is possible with that being said. So, be careful there with your position size. Now, from a charting perspective, technical perspective, the stock looks good. This is a bullish falling wedge pattern. Maybe it needs to work down a little bit more into the pattern. That's certainly a possibility. But we have double divergence here, double bullish divergence. We had positive divergence here at this low. We made an equal low right there, double bottom so far with an even stronger divergence. Now, you'd really need to see, looks like a W pattern forming here, a possible W bottoming pattern. But there is resistance here around the 1485-ish level. We need to clear that, and ideally a break above this downtrend line. Now, the good thing is they come in almost together, at least at this point right here, they come in together around 1480 or so. So longer term really is what you're looking for. If the financial markets hold up, if Deutsche Bank holds up, that one could be a nice long-term trade. FXCM, let's see what we have here. I put a question mark by this one. Not one of my favorites, but we do have what seems to be a decent support level here. If you can buy it back on dips back to that 750 with a stop not far below. This one we had a downtrend line here, pretty well defined, and it ripped once it broke above that downtrend line. Now we have another almost identical downtrend line, same slope, very similar slope. We broke out, and it's been moving up. It's not moving up as impulsively as it was back here, so you may want to watch it, see if it starts taking volume. There's also a little bit of resistance right here it's dealing with right now. You can see the price, shelf back here. So maybe it needs to pop above that level, pop above the recent highs, and especially if it starts taking volume, then you could target a move all the way back up here again. And there'd be some near-term targets. You see this gap we have to fill back here, so you could target the top or bottom of that gap and ultimately move up here. And if things even get better from there, then a breakout above that level could really, there's a huge gap back there to fill. So again, not one of my favorites, but one that I thought would be worth mentioning, especially if that's your type of chart pattern you like to trade. This is Tiffany, TIF. I put this line here. Let me move it away for a second. This is a nice bullish falling wedge, confirmed with bullish divergence. Now, my read on this chart, my best guess is this one probably needs another leg down within the wedge. That's why I had this line here. So just one to keep on your radar. If it broke out here, that breakout could stick, although I would probably pass on it at this point. My guess is that if it did break out, at best it might run a little bit and come back in to back test the wedge. I just don't think this wedge is fully developed enough at this point to have a sustained breakout. So ideally would be another thrust down towards the bottom of the wedge as long as these divergences remain in place. By that I mean, the MACD or PPO, I'm using a PPO here, could roll over, make another trough or a higher low, as could the RSI, and that would keep the divergences intact at this point, and then possibly a breakout from there. That's just one possibility. And let me put back let me put a MACD on here. There we go. So now you can see the MACD down below. Same story on the MACD on this one. Okay, that's Tiffany. Next one. This is an active trade. I don't think this hit the stop. It may have. We had a run down in the ag stocks lately, but Pot Mosaic I've had on as growth and income trades for a while. I'm still personally long. I have shares I've tucked away in some long-term accounts on these, just collecting the dividends. And so far it's holding that support level right here. It had this sort of triangle-ish pattern. I might remove that trend line. There's only a couple tags there, so let's take that away for now. Or we could actually do this now that I look at the stock. Looks like that is a more accurate fit since we have numerous reactions there. So far they're holding up, and again, these ag stocks pay you to wait as long as they don't go down too far. Pretty decent dividend yields. This one's almost 4% on Mosaic, and it's just been consolidating. That's all we can say. It's frustrating if if you could care less about the dividend, if you're just looking for capital, appreciation, then it's tough. It's going to need to take out this trading range here. And until that happens, we might continue to grind sideways for a while. Of course, we could break either way, but I still favor an upside resolution on these. And there's a couple other ags. I think I already covered one early on. Let's see what else I have in here. I'll get to one of the other ags in a second. Let me just go through these in order. COP, ConocoPhillips, and this one looks like decent support here around 38.75, and we just kissed that support. So that's an objective level to go long with a stop not too far below. Because longer term, this chart looks good. Here's a long-term downtrend line. This one goes back for quite a while, actually to the highs back in 2014. So there's a level to watch. You could maybe scale in here, or you want to just put it on your radar, set a price alert, replicate this chart. There's a minor downtrend line there that the stock is struggling with now, but this is the one that we really need to watch for. I'll set an alert if I don't already have one. That yellow downtrend line on COP. And then, I don't even have, I would say, just eyeballing this chart, we go up. If that bear market downtrend line's taken out, my minimum target there, or over time, a swing target or a longer term target would be that 60-50 area. And that would be, from this point here, that's about a 45% return plus. It's kicking out about a 3.6% dividend yield. So another one you get paid to wait if it takes a while to get there. LL. This one I've mentioned in the trading room quite a bit. We even had some official trades. We had one hit recently. The last trade hit that first target at 1597. The story on LL, oh, there's a daily chart, and I put this up. It's probably easier to view this on the weekly chart. It appears to be a stock in a bottoming process. You know, LL had their problems in the last couple years with all the manufacturing, the stuff they were, you know, they make flooring, and a lot of it comes from China, where they have the productions, and what was it, arsenic or something was in there. They just wasn't very environmentally, or there was some issue with it, and I can't even recall, safety issues or something, some chemicals they were using in the flooring, but they're still around, and I don't think they're going anywhere. You know, there were some lawsuits against them. I don't know where that is. You guys can look into the fundamentals. I'm just looking at a stock here that appears to be basing, you know, looks that maybe the worst was already priced into the stock. You know, as I made the case for before on those trades, longer term, there's a potential that a bottom has been put in LL, so it still needs to take out, as I said, needs to take out that the top of this trading range, and if it does, let's see, draw that out for you. Here's that trading range. So if it takes out the top of the trading range around 18, a little over 18 or so, the next target would be up here, and that's about 23.20. That's a pretty decent run. And again, longer term, this one has a lot to gain back if it can get back on track to where it was before. Let's see, IPI. This is another ag stock. So like I said, there's quite a few on my radar. This one's kind of eking out above this downtrend line, similar to the RTK that I started out with. You can see a downtrend line that goes all the way back to looks like June of 2015. Several reactions there, and it really forms this symmetrical or almost symmetrical triangle pattern, and we're peaking out just above the line, but there's not any volume confirming. So this breakout is a little suspect. I wouldn't take this one just yet, other than if you wanted to scale into a position. It's a low-priced, you know, potash stock, and if we can start to take some volume and the stock moves up, this would be my first target, 180. Beyond that, I see it could run all the way up here to about 259, 260. And ultimately up here to about the 350 area over time. So a lot of upside potential. And the thing is, if you want to start building a position, the trend has been up since March. You can see this is an uptrend. See the series of lower lows. We haven't really made higher highs. It's almost a looks like an ascending triangle pattern. If you draw this line and look at the yellow line there, that's an ascending triangle pattern. So a breakout again of 180 would trigger that. That would give you a measured move if you measure the distance of the triangle right here, the widest part, which we do. Throw that on there. Let's say it breaks out at this point, and that's a pretty nice move, at least measured target in IPI. So you could scale in here, take a starter position with a stop not below, because you're not too far above this uptrend line. So that's where your stop would be. And there's also horizontal support there around 120 as well. That would be the final stop, in my opinion, that 120-ish area. That's IPI. Okay, I already covered potash, but this is for I know there's quite a few Canadians that frequent the site. So these are the shares that trade on the Toronto Stock Exchange, POT.TO. And this one, and it just gives you a different view. It's the same company, but it's given you a different view here, which I have a bullish falling wedge pattern. I excluded a few candles here, a brief breakout, but I have a lot of reactions on this trend line, so I do think it's valid. And it's traded through there as well a little bit. And that might also be due to currency differentials, you know, between the U.S. dollar. I don't know how so I'm assuming this one's priced in Canadian dollars. But it looks to me like a breakout and a back test. At the very least, it looks like a stock that appears to be bottoming, just like potash and Mosaic. You can look at this nice support level here. This is a low right here, around $20. So as long as this one holds above $20, again, you're getting paid to wait in it, and it looks like it is possibly putting in a basing pattern here. Most recently would be this area here. So a break above that would be bullish. Most likely bring us up to any or all of these targets here, or these horizontal resistance levels, 25.75 roughly, 29, and beyond. Depends on, how the sector does going forward. Let's see, only a couple more. SSI, I have a question mark by this one, meaning not crazy about it, little work to do. You can see a downtrend line here that may come into play soon. And there's also horizontal resistance here around $6, a little over 6. So if it breaks above there, you still have to watch that downtrend line. And I probably should have put a resistance level there. But this is a retail stock. Also had a divergent low, which I should mention here. That's one of the things that stood out to me. So maybe some potential in SSI as a bottoming play. It's an apparel store. And there's the levels to watch. And if it gets above that downtrend line, sure, there's some resistance along the way, but there's a big gap up here ultimately to fill if this company can get back on track. But I don't know much about the fundamentals on that one. And we'll wrap it up. I should have pulled up a nat gas chart. I have that on a different charting platform. This is just one of the ETFs, GAZ. You can see the downtrend line. I've maintained all year that I've been longer term bullish on natural gas. And it has bottomed and it's moving up in an uptrend. You see each of these lows is higher than the previous. So there's your uptrend and higher highs. And you can see basically a breakout and a back test of that downtrend line. UNG is another ETF. And these guys don't do a perfect job of tracking, but they kind of give you the gist of what's going on in the natural gas arena. You can see a breakout of this wedge here. It's moved up and it's been consolidating. Natural gas, that's why I haven't posted a lot on it recently. We did have this as a long before. We did well on that. But as of late, it's just been consolidating in this sideways choppy range. So I can't really make a case at this point as far as an entry. Longer term, I think it still looks good. And maybe you want to buy on this dip or pull back to the bottom of this range with a stop below. But I would have to align this with the chart of natural gas, which I didn't have already up to look at before this video. I have that on another charting service. So we'll wrap it up here. That's what I'm looking at now. And again, some of these may become official trade ideas, but official, unofficial, just if you like the chart, replicate it. If you have any questions or want me to post an updated copy, just shoot me a message in the trading room or via private message, or use a contact form on the site if you're a silver member. Okay, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.